Hey there traders, welcome back for episode number 73 from the StockBandit.tv. It's always great to see you here, and I hope it's been a good week of trading for you so far. Now, we know that the NASDAQ has already broken out. It has cleared important resistance this week and is now starting to head higher. And we've got this 1905 level up here, which is from last fall. And that's kind of the beginning of an unfilled gap that extends up to the mid-1940s. So, for this index, there is kind of a next level to keep an eye on here, right around the 1905 zone. But that's not always the case with a lot of stocks. And in fact, when you look through the charts on a night like tonight, after seeing a breakout in the market and a couple of days of basing action, there are a lot of bull flag patterns out there. And so one thing that I'm asked quite often is, if there's not clear levels of resistance overhead beyond a breakout level, for example, a bull flag, how do you decide where to take profits? Where do you determine adequate places and appropriate places to set those orders out and start booking some gains along the way and as that stock moves higher? So that's what I want to talk about in this episode. So, sometimes in individual stocks or the indices, like we see here in the NASDAQ, there is some well-defined resistance. And so that's an area that it's going to probably be a logical spot to lighten up if you're long. However, sometimes you take a look at an individual stock and there's not such well-defined resistance for a little ways. And so let's take a look at a stock here, MDP. This is one I pointed out last night to members in the Stock Bandit member area. And so the premium video saw this setup last night before it broke out. And this thing is already on the move higher out of this base that it's built over the past several weeks, okay? So it's headed higher here. Where do you determine to book profits? Well, first of all, there is some resistance up here, a few points higher. So that would be one logical spot. But at the same time, I want to just cite this example here that oftentimes you can just take the size of the base. You can compare the difference between the low end of recent support and the upper end of recent resistance. And so basically you're going to take the height of this base that the stock is starting to break out of, and then you can oftentimes project that beyond the breakout level. So that's certainly one way to determine how to book some profits in a setup if you don't see that well-defined resistance further back on the chart, okay? So keep in mind, always just gauge the height of those bases and look for kind of a measured move above that if you get the confirmed breakout. Now, other times you can just kind of gauge the character of a stock and take a look at STAR. This one is sitting just shy of a possible breakout area here. But let's take a look at a couple things. The last couple of runs up in this stock have been about $2 at a time. And so, that's kind of a rough estimate here, but essentially this stock has been showing that it's moving about $2 at a time. And so if this one were to break out, then I think it'd be a fair guesstimate to presume that it could go 2 points from that breakout level. Now, I'm certainly not picking out this exact stock saying it's going to run 2 points higher if it clears this level, but I'm simply using this chart as an example that oftentimes stocks get into kind of routines. You and I have all kinds of routines in our lives. A lot of stocks develop personalities or routines, and they tend to make sort of measured moves in that regard. And so if you don't see a real well-defined area back historically on the chart to where you think you ought to be booking profits, take a look at the previous moves and what kinds of an advance those have yielded in the stock. And oftentimes you'll be able to get some idea of a way to project some kind of a profit target there, and then you've got some appropriate levels to start lightening up on a trade, all right? Two more things. Always keep in mind that if you're monitoring the price action, you ought to get some feel for the pace of the momentum in the stock. And if you see a sharp breakout and the stock is acting really well and it's running quickly and then it starts to slow down a little bit, that might be a cue to lighten up a little bit as well. One other thing is always keep in mind you can make partial sales. This is something a lot of traders overlook. They think they've either got to be all in a trade or all out of a trade. But keep in mind, sometimes it's worth it to pay a little bit more in commission, especially those of you who are on a per trade commission basis, to scale out of your trades and make partial sales on the way up. And that way you're lightening up on your position, so you're booking some profits along the way, and in case that trade turns around, you're going to be much better off. However, you're still in a position, you're still in some of it, to where if the move continues, you're still able to profit from it. So keep those partial sales in mind. It's definitely something that I think a lot of people overlook, and yet it could help a lot of people with their trading, and maybe you fall into that category. All right. Thank you again for joining me for this episode. I will be back soon with more videos, but in the meantime, trade like a bandit.